take a look at some of the interesting activity we're seeing on the markets at this stage, because such volatile trade coming through on East African cables in particular. The counter dropping back 6.3% in yesterday's session, with investors once again turning their attention to the company's results, where it reported a 50% drop in pre-tax profit. What are you making of the price action we're seeing on that counter?
Well, you've got two dynamics playing out here, because the investors in Nairobi, sometimes, especially the retail investors, they tend to get excited by bonus issues, and you know, EA Cables did both a bonus and a dividend issue. The other side also, they are very optimistic about the future, because you've got markets like Southern Sudan, Ethiopia, Uganda, Kenya, and Tanzania as well, which can actually support growth going forward, because as you know, as economics grow, they tend to the energy sectors grow in tandem, and that's why EA Cables feeds off. But then again, you've got the same issue of returns, and the same reasons that they didn't make it, they didn't grow as much as was expected to this year, could be the very same reasons that they will struggle next year as well. So there's all this back and forth playing out in the investor's mind, and it's playing out as well in volatility of the price of the share.
What do you make then of that announcement of that decision to pay a bonus share for every one for every four held, also a dividend of 1 shilling per share, when the outlook is pretty uncertain at this stage?
Well, they perhaps thought that to support the price, and I'm sure they understand the psyche of the Kenyan investor or the Kenyan market very well. So they took a corporate action that perhaps signaled better times ahead. So on that helped support the price, and I think they achieved their objective.
Has it been enough of an encouragement for you? Are you a buyer into East African cables at this stage?
No. I like to look at fundamentals. I prefer Kenyan General, which as well offered a bonus share of 1 for every 2 held, and the earnings, EPS was about 10 shillings a share. It trades at a significant discount, because it's right now it's about 5 times earnings. It's slightly above 5 times earnings, because of it's trading at 65 as it closed at 65 yesterday. So it's a much more attractive share to me. The only drawback being liquidity.
Let's take a look at a player like. Sorry to interrupt. Yes, you think?
No, I said I think I can work with weaker liquidity now.
Well, let's take a look at another player where, you know, we haven't seen much activity on the counter, CMC Holdings, but expecting profits to rise 150% this year. And some would say that acting as enough encouragement for the investment community to get pretty active on the stock. Your view on CMC Holdings?
Well, it's very much dependent upon a political decision where the government intends to phase out the small, I believe in South Africa they're called taxis. We call them matatus here. So the government wants to face that in favor of bigger buses, but they may encounter some resistance, both politically and in parliament, and as well as the bigger matatu fraternity. But that remains to be played out, and until the first, second, third buses are sold, I think investors will take time to get into that space.
If that does come to the fore for CMC Holdings, do you see it enough to mitigate against the aggressive Japanese yen currency, where CMC has been buying trucks from Japan specifically?
Well, that's why they got they think Aicha and MAN trucks to help mitigate the volatility of the Japanese yen, because these other producers are European based. So I think that's how they want to play it out, and it remains to be seen how successful they are.